Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex market analysis for the week coming up of June 13th through the 18th. And just to remind you that this webinar is for illustrative and educational purposes only, and also to remind you that some of this is in the lag. Well, it's the weekend, so everything is now closed, but the futures, as always, is all in delay. So one little reminder before we get into our presentation, just please, if you have not done so, subscribe to our YouTube channel or Twitch channel, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And let's go to our live screen here. We have the forex-trading-unlock.com website pulled up. From the navigation bar, we've already pulled up our workstation page, and we have the dollar index chart already pulled up for you already. So, excuse me, sorry about that. Excuse me, sorry about that. Allergies. I was just working in the yard just a little while ago. All right, so we have the dollar index pulled up. And just to remind you about what's going on, you can see that the dollar index has been edging higher slowly over the past, what is it? I would say a week and a half. It doesn't seem like it's rallying, but believe it or not, it has been going higher. So we'll have to keep on looking at these currency crosses with the outlook that, guess what? There is a slight dollar bull going on. So now, is it a big dollar bull? Absolutely not. Right now, it is looking more like a grinding bottom is what it looks like to the most part. So I would be very cautious being bullish on the US dollar this week. However, we have a bunch of markets to talk about that are in flux, and let's get to it. So besides the dollar index, we'll tell you how these correlations will line up. But right now we have the dollar index just nudging below higher move highs. Now, we've been growing off of this low from the end of May. We made a lower move high, then we made a higher move low, and then since then we have continuously made a higher move high, a higher move low, and now we are looking to breach this 90.64 area. Should we do so, I think the 90.93 area will be under pressure, and that definitely would most likely add to momentum for the US dollar in the short run. Our target area is this upper little target band right here. So now we have to get that new high set in order to even remotely think that we're going to get into this area. But like I said, as we make higher move highs and higher move lows, the trend is your friend. Currently, this is looked as an upside correction, so we're not bullish the dollar overall. However, in the short run, we are. Now, there are some significant things that could be giving us a reason for why there's going to be dollar strength. So, first of all, let's take a look at the 30-year Treasury bond market. So the 30-year Treasury bond market helps to influence the price of the dollar. We had a rally going on all week, but we did make a higher move high on Friday and settled lower. The unemployment claims on Thursday are not making people very happy. So should we start to see a sell-off in this 30-year bond, this is something you want to be mindful for any currency cross versus the dollar, that if we start to see a break and a slide, especially if it gets down below this 158 area, that would be a good indication that dollar strength will be coming in versus many other currencies. So as the bonds go down in price, interest rates go up, and that would help to drive this market higher and head towards this target area right here. Okay, so that's what we're looking for. If we have a little bit of a sell-off in the bonds, if they're grinding, remember we have already the Fed kind of inkling towards raising rates to help curb inflation, which that's not how you curb inflation, but should they raise rates, that would definitely have the Treasury bonds selling off. So I think that considering that we have oil now bucking above $70 a barrel, and this is something you need to look at too for some of the currency crosses that we're going to be talking about, is that as oil is above 70 and continues to trade higher, this is going to start to have a big impact on inflation. There is no question that inflation is here and has been here for the past few months, but it's accelerating at a very big rate. Just to give you an idea, take a look at this for as far as crude oil is concerned. Don't worry about the forward curve, but in 1 year, this market is up over 95%. Year to date, since January, it's up 46%, and in 6 months, it's up over 55%. And I can obviously attest to that one for sure from just having gotten gas this morning. So for sure, gas is definitely up. In fact, it is up almost 50%. Or actually, it's almost up 100%. It went from $1.80 to now it's over $3.25 for just regular. All right, so these two markets are definitely starting to influence the dollar. Also, we have gold to look at, and then we will get into the individual crosses. By the way, if you guys have any questions about any of these crosses, please feel free to leave the question on Twitch or on YouTube, and we will answer them as we get through this video. So gold, which is also starting to have a little sell-off, we are looking to see if this helps to add strength to the dollar as well. As we see what happened here, we made this high, we came down and made a higher move low, but since then we failed to make a higher move high, and now it looks like we're riding this upward sloping support line that's been keeping the trend intact. Perhaps a bearish correction is on the table. So how far can we get for a bearish correction in gold? Remember, this will influence what goes on with the yen and a couple other currencies. So should we get a nice correction, let's use our 50% line as pretty much a good target area, and the 0.618 is our extreme off the Fibonacci levels. So we're going to get rid of this, make it a little clearer. Here is our downside target zone. So should we continue, if we make newer move lows, that would confirm that the downside, the bearish correction is in place, because we have this upward sloping support line that this is holding up the current trend that's been going on since April. Be mindful of this for as we talk about the yen and a couple other currency crosses. All right, so enough of these alternative markets. Let's look at the Euro US dollar, which is the biggest component of the dollar index. Look at how that sold off. We made a lower move low after a lower move high. The downward trend is intact for this bearish correction. Remember, this started back at the beginning, or the end of May. We had this little which seemed to be just a little stalling here, and then it looked like we were consolidating. However, over the past week and a half, we've had definitely some big sell-offs. We grind higher and we sell off very sharply. So especially going into a Friday trade and into the weekend, this newer move lows, that's giving a lot of support to the US dollar. I'd be very cautious trying to be a bull with the Euro US dollar right now. Especially with oil going higher, and should, like I said, the interest rates start to go higher, meaning bond prices go lower, that would help to reinforce a continuation of this downward trend. So now the question is, how far can we go? Well, if we use this as a baseline like we looked at with gold and what have you, let's use the 50% level. Now, we're not looking for a major sell-off here, but definitely a little bit of a consolidation and a little bit of a bullish correction for the US dollar is in store to begin with. Alright, so let's use this little target area here. So let's say we continue at lower move lows and lower move highs. Then I would say sometime over the next month and a half, as we get through the first half of summer, we can get down to this 119.84 to 119.18 area. Now this is kind of significant. We're not looking for a major long-term sell-off here. We're just looking to extend this bearish correction, considering the fact that, one, we have been making lower move lows and lower move highs. This is indicative of what? A bearish trend. That doesn't mean that the overall trend is bearish. In the short run, on a daily and hourly, we're bearish. On the intermediate term, like on the weekly, we're somewhat neutral to even still bullish. And on the long term, you have to be bullish with this trend right now. It has not really turned. So what we need to see is how this manifests over the next couple of weeks, and we'll see where it goes. Hey, what's up, KS and Care? How you doing? Hopefully you got some questions. If not, just keep listening. We're getting into it. We're going to get to the cryptos at the end. First, we're going to go over the FX crosses. So once again, we're looking for this little target band here over the next, I would say, week and a half to 2 weeks as we head towards the end of the month. And remember that we are coming towards the end of the quarter also, so it's very possible, since we've had such a big run over the past couple months, that a lot of funds are going to start dumping over the next week or so, balance their books ahead of the month of July. There's a lot of chaos as far as geopolitical stuff going on right now. You have the G7 meeting going on. It's a lot of pomp and circumstances. This is all for show. This is all the top dogs from the top countries in the G7 getting together saying, hey, we're getting together for the first time in over a year. It's more about their partying and just pressing their more activist agendas than anything else. Remember, the G7 doesn't necessarily have any real influence on any true policies or what really goes on. These are just representative of what they're trying to say as a group that we're leaning towards, which are going to be climate change and some other stuff. But as far as helping the markets out, guess what? They ain't even looking there. So just be mindful of that. I'm not talking about being political with this, but the G7 thing is ignoring the biggest thing of all, which is the economy and how to keep it going, and also what they're doing as far as trying to either keep a balance with their currencies. It's going to impact exports and imports across the globe. So also for the euro, which we're talking about right now, this is going to be a very, very big deal as the oil prices continue to climb higher and higher. Costs in the EU will continue to scream higher and higher as well. So as production costs get higher, and as the euro is strong versus the dollar, their exports are going to be very, very slow, which means we'll be importing less from the EU for sure over the next, well, not for sure, but most likely over the next 3 months to 6 months, and it's already happening. And as they start to try and come out of the pandemic and start to kickstart their economy, it's not happening while they're raising their debt total because of the geopolitical stuff they're talking about at the G7, which is spending money on other countries and not spending on any money on their own economies. So this is something you need to be mindful of where is the money going. That's going to weigh on the euro, and also on the euro US dollar currency cross. So we've discussed the major component of the dollar index. We have a downtrend in place. We have a target area once again of this 119.84, 119.18. The only thing that I think would really give us a question of what's going on with this trend would be if we get above this last current move high from the week. $1.2221 is keeping the bearish trend intact. If we get above here, the downward sloping resistance line will be taken out, as well as a higher move high after a lower move low would be accomplished. So if that does occur, something like this, and we go up this way, that's when obviously all bets are off, the bull is back, and I would be very cautious trying to sell into anything above this 122.21 here. So right now, if you've been short for a while, this should be your extreme for risk. Anything above here, I think you're just kidding yourself and just adding to the to the bull's piece of the pie. If you're an aggressive bull right now, I think you're trying to catch a falling knife. I would wait for a true signal. Buying into this dip, I think, is going to be rough, and you still have a good 2 handles worth of pain before you may start to see a turn in this market. So that's something to be mindful of. All right. British pound US dollar. Let's check out what's going on here. All right, British pound US dollar. Notice this little trading band I have set here with these dark lines. This market, is it basing? Is it topping? Has it plateaued? Well, interestingly enough, we did have a sell signal here on this day right here. We hit the short-term target initially a week and a half ago, and then on Thursday we hit the actually longer-term target for if it was just an intraday daily trade, and especially just a short-term correction. So support is very, very strong right here. However, that also means that if it fails, it's a very good indication of where the market's going. So what is the market doing right now? So right now, here was the high, and it's kind of grinding lower. So as you can see, it was flirting with an upside breakout, failed to make that, and then boom, fell back on its lows. Even though oil is going higher, the oil trade is no longer helping to drive the strength in the pound in oil-producing countries because of what's going on now with Iran being put back online, and also oil above $70 a barrel. Oil has to fall back into the mid-60s to upper 50s to become something you can use as a baseline for certain currencies of strength, because now it's starting to cause an impact on the economies globally, because as the price of oil goes up, gas is only a very small component, and diesel are only a small component of a barrel of oil, but construction costs, plastic costs, medical costs are all going to skyrocket because of the price of oil right now. And especially, once again, too, is now that Iran's been brought back online, other countries that produce oil, this is a big deal for them as far as who gets a piece of the pie. So, and especially since the U.S. is no longer exporting oil anymore. So that's a big deal as far as where the overall trends help to dictate the direction of these currencies. Where the price in oil has been helping to lift the British pound, now it no longer is. So I think that's where range traders, they've been cleaning up here, basically buying in the new lows and selling the new highs without having any follow through. It's a big chop zone from this $1.42 even basically down to $1.40.97, so basically $1.41. It's a nightmare. I would be very, very cautious. We did hit the short-term sell signal. Since then, we made a lower move low, we made a lower move high, we made a lower move low again. We tried to make a higher move high. We failed to do so on Friday, and now we're back here in this area. So I would be kind of mindful of this. If we have follow through here, and especially take out the low from Thursday here at $1.4073, that helps to confirm that we'll have a little bit of an extended correction. As far as depth of that, I would say we'll use a little fib here and just use the old 50% rule. And let's see, where is our horizontal line? Okay, so for 50% rule and 0.618 for an extreme, this would be our extended target area as far as a sell-off. So should we maintain this downward sloping resistance line here, I could see, especially if we take out this low, you're probably going to see a little bit of a selling frenzy. One of the main reasons is because of this other low right here. If we take out this low right here, that definitely starts to tip the scale and also takes us off of the support that we get from this upward sloping trend line right here. So if we come up here, as you can see, if we start to fall below this upward sloping support line, that confirms our downtrend and the likelihood of us falling into this downside target area, which is $1.3958 to about $1.3890. We're not looking for any extended sell-off beyond there, but I definitely think that a bearish correction, especially if we see reasons for dollar strength, such as the a rally in interest rates, meaning a bear market or a slide in the treasury bond market and the actual futures market, as well as crude oil. If it continues to escalate and helps to slow down the economies, the UK and the EU are both going to have a big problem as far as coming out of the slump as the cost of production starts to go through the roof. So initially the rally in crude was helping economies and helping currencies. Now it's going to start to hurt them, especially as it starts to hit towards 75. I've had a target of $100 for a long time with a $75 target. I said by 4th of July. I said 75 by 4th of July. We're almost there. We'll see where we're what happens over the course of the next month. However, once again, the rally in crude is not helping to lift the pound or the other Canada or other currencies against the dollar. That trade is off the table. Now it's about slowing down those economies. And as those economies slow down, guess what? Where are they going to look to, and then what are they going to do? They're going to start buying dollars. So especially because their exports are getting crushed. So right now the cost of all these goods coming out of the UK, the EU, and all across the globe over the past couple months, and everything that's been ordered right now that's coming over for the next 6 months to a year is inflated at a very high price. So the demand for anything beyond a year out is starting to decrease at a very rapid rate, because no one wants to pay those prices that far out, especially when they don't know if there's going to be another shutdown or what's going on. Like, there's no way that businesses can handle that threshold. So I think you're really going to start to see a lot of currencies swinging, and U.S. dollar strength in some of the very interesting currency crosses where it was a layup just chasing the oil trade up for the last basically since the beginning of the first of the year, and especially since the executive order on January 20th. So we'll see how things happen now. Obviously, anything can and will, but right now we have no reason to be bullish. Now, however, should we get a rally above this $42.03 level and get out of this range, then we will be targeting higher new highs off of where our sell signal had initiated. Now, remember, the overall trend here for the British pound US dollar is a bull. Long-term, short-term, intermediate term, basically it has been bullish for over a year now. Only on the hourly, and because of attrition, we're coming into this wedging part right here where the upward sloping support line is helping to give credence to us have definitely a little bit more of a leaning towards testing support rather than making a run at resistance and trying to breach upper areas and create a big rally. So, and also I think that you have a lot of weak longs and also a lot of people that are looking to take profits that don't want to really deal with a significant sell-off because they've had such a good run. And also remember, it's the end of the month coming up soon. I know people are saying, what do you mean it's the end of the month? Well, it's June 12th right now. It's going to be the 13th through the 18th for this weekly analysis. And once you got to remember, end of the quarter is coming up. So end of the month is actually in the middle of the month. By the end of the month, the books are already balanced and done. They already know where they're at, and so they're already going to lunch and having cocktails saying, hey, we locked in this return for our books. You know, so that's where I think you're going to have to really start to look at what's going on, especially because we have two very questionable quarters coming up ahead of us with a lot of economic numbers. They're going to put strains on the financial markets all across the board. So, like I said, once again, if we don't get a rally back above this 142.03 area, we are most likely going to test new lows, especially with the way we settled on Friday. All right, now let's take a look at the US dollar Swiss. This is another one that's been beating up the US dollar for a while. It even set a newer move low on Wednesday. However, since then, we have seemed to have a little positive turn of events. Is it chasing the dollar because dollar is getting stronger versus the euro and the pound? Maybe. Is it time for the US dollar Swiss to start to base and just kind of go sideways? Maybe. Are we bullish? Not really. However, once again, remember we referred to the interest rates. Absolutely, if the bond market starts to take a dive and starts to go slow or go south, that means going to break down. That means also that interest rates go higher. Remember, there's an inverse relationship. If that happens, then it's a really good chance that we're going to see this market continue to go higher up towards this area here. Now, we really need a breach of this 90.57 area to confirm any strength. Reason being is this is a lower move low after a lower move high. The trend is lower. So, but this trend is very steep, and as you can see, we already kind of grinded out of it by attrition, and we could be setting up a head and shoulders for all we know right now. This is something to be mindful as well. Since we may be basing, this may be a shoulder over here. Let me make it a little clearer for you. So if we mark this here as a potential head a couple days ago, all right, for those of you that are not familiar with the head and shoulders pattern, it's a basic bar chart pattern that's been used by traders for a very, very, very long time. So if this is the shoulder here and this is the head, it would be likely that we might chop around here a little bit and then we still need to find another shoulder, okay? Or it's not a head and shoulders forming at all. We're just going to trend higher into this 90.57 area, and above here I think you will find some fresh buying momentum. As far as how high can we go, well, that's anybody's guess, but let's say that we do have a dollar correction going on here. Let's just say, for argument's sake, that there is a short-term dollar bull that's strong enough to give us a little lift. Am I looking for a major move in the dollar versus the Swiss? Absolutely not. I think at the most you have a rally up into this target band somewhere up in here. That would be a nice little stable area. Remember, it wasn't that long ago that we were looking at the dollar being above parity with the Swiss. Now look at where it is. It's down in the upper 89 handle. So we're not looking for a major move to the upside, but a challenge of 90.57 would touch off fresh buying for the most part, and then have us bullish, looking for an acceleration of the trend. Remember, if you're looking at distance-wise, this is not a really significant rally, but it's possible to have a nice upside correction. Overall, are we bullish the dollar versus the Swiss in the super long term? Absolutely not. But in the short run, It's very likely that we are basing right now, especially as we start to see that how the economic numbers pan out across the globe. All right, here's another interesting thing to look at. So US dollar yen has been very, very strong for a while. It's wedging. Now here's something why I said that the oil trade is off the table. Now the interest rate trade is never off the table, okay, because of the fact that it does help give us a reason for, depending on which way the rate is going, it will either give strength or weakness to the US dollar. Now, doesn't mean that it's going to overall affect all of them at once very severely. When it comes to the US dollar yen, once again, since I said the oil trade is off the table, it's helping this market to start to wedge. We had a sell signal here a little over a week ago. This is a bearish engulfing line. Let me put this out for you. A bearish engulfing line sell signal. And this is very important because of what's going on with our little scenario here. If I'm right about oil no longer setting the trend, then higher oil doesn't necessarily mean that the US dollar yet is going to continue to rally against the yen. Here's another thing. Since Iran is now allowed to produce and sell oil on the open market, who do you think they're going to be selling oil to? Japan is one of those countries. So that gives another outlet for Japan. So that gives strength to the US dollar, to the Japanese yen overall versus the US dollar. The fact that we are coming off of higher move highs and higher move lows, the trend, no matter what, is definitely bullish in the long term, intermediate term. Only in the short run are we looking at this as being bearish. So the high here of around $1.1036, this is our critical level. Obviously, if we rally above here, that's higher move highs, confirming the bullish trend is totally intact. And then we're looking for not just a short rally, we'd be looking for us really to get up, way up into this 111.5 area, even up towards the 112, 113 even area for a US dollar yen strength. Right now, short-term sell signal. I think we're going to start to have divergence, meaning that the US dollar is going to gain strength and be strong in the dollar index. But remember how we saw that dollar index chart in the beginning and it was grinding? The reason it's grinding is before there were points where the dollar was strong, rallying against most currencies, and especially the bigger currencies. And then there was divergence where certain currencies were rallying against the dollar and vice versa. So that's what we have here. And this is where you want to really be mindful of what is the dog wagging the tail or the tail wagging the dog. When say the euro and the pound and the Swiss and many other currencies, when they are weak versus the dollar, for some reason the yen will, for the most part, start trending the other way. And then conversely, if the other currencies are very strong versus dollar, like they have been, then the yen is weak versus the dollar. And if you look at this chart, this is the US dollar now in front of the Japanese yen. We've been looking at the US dollar behind these other currencies. These look like the other ones, and we're bearish those currencies. That's why we're bearish the US dollar. Now, as far as how far we'll get as far as a sell-off, we did already pretty much come into our target area for the short-term, just intraday sell-off off of this daily signal. But for the longer-term signal, that is not the case. For that, we go to here, and then we go to here. So then we have this 50% level here, and we have this 0.618 level here. Ironically, this is also another big deal as well. You notice this little target band. This is not out of the realm of possibility that we could touch down into here, especially because we are coming right into this upward sloping support band. So even if just by attrition, by going sideways, we'll be riding support, and we may come down and touch this 108.88 area, down this 108.54 area. This is key. It needs to hold, because if it fails, that's this low here. We're coming off a higher move high, then we made a higher move low, we made a lower move high. This is a very key pivot too. The high from Friday at 109.85, trading below here, has us definitely looking for a test of support. And if we have a test of support that comes down into this target area here, then we really start to have a little issue, because we're taking out these lows here, and underneath here, that gets bearish. That gets very bearish. then we're looking at coming and challenging this low down here. So that way we could have a significant sell-off. Now this would be where we have a, like I said, if we're right about potentially having a corrective rally in the dollar overall as far as the dollar index, then that means that it's most likely going to get the biggest weight would be from the euro and the pound, which have the biggest weight in the dollar index. So that's why that would be having the index go up, the euro US dollar going down, the British pound US dollar going down, US dollar Swiss probably getting a lift, but the US dollar yen, absolutely not. That's where we're looking for a little bit of weakness in the dollar. So where there's strength in one currency cross, you definitely have chances of having a weakness in another currency cross as well. Okay, so let's continue on and see where we are going with this right here. So, okay. All right, we have the Australian dollar, US dollar now to talk about. This thing's been a big sideways, as you can see. It's been a nightmare literally since the beginning, the end of 2020 and going into 2021. It set this range and it's been bobbling for the most part in it. It's been ugly. This is where we go again with this dollar strength thing. If you look at the high that was set overall, it looks like the Australian dollar actually now is trying to figure out whether it's in the big sideways or is it the beginning of a extended correction for the Australian dollar of US dollar, meaning strength for the US dollar. We shall see. The way it was trading Friday, it looks like it wants to test this 76.43 area. If it does, that's a big deal. We would most likely see more selling come in and then have a test of the 75.62. This is the extreme area for correction versus the dollar. Anything below that means that we really have dollar strength coming in. Also remember, as we start to see whether or not we do have a global slowdown or a global pickup, Australia has been supplying to China, which if things start to slow down globally, and especially with dollar weakness, that would really start to bode improperly for Australian dollar currency bull. Just letting you know, it's very likely that across the board the Australian dollar could start to see a big sell-off versus the US dollar, the pound, and the euro, and a bunch of other currencies, not even the yen. So that's something to be mindful of. Right now it's been in the big sideways, but the way it did sell off on Friday, and we are coming off of a higher move low in the grand scheme, but if you look at it from here, we made a lower move or higher move low, lower move high, and then we came down here, we made a higher move low with a lower move high, then we made a lower move low again, so very choppy. But then this low is significant, so unless we really start to come up above here, I think you're going to see Australian dollar, US dollar start to continue to decay, especially if we have dollar strength. New Zealand dollar, US dollar is pretty much in the same category. This one looks a little bit more like it wants to sell off. This one may be setting the lead, and this is another example where should New Zealand dollar, US dollar weakness start to really filter in, this is another indication that dollar strength is legitimate across the board. It also lays credence to that US dollar yen being very weak as well. So watch out. Japanese yen strength could be kicking in very, very strongly versus many currency crosses, while the dollar is coming weak, gaining strength versus various different crosses as well, even though the US dollar most likely will be not gaining strength against the yen like we were looking at. So this one here, we don't have a signal right here, but we are following the trend here, which is higher move high. We made a higher move low, then we made a lower move high, lower move low, lower move high. We made a lower move low on Friday. The trend is bearish in the short run. We're looking for a test of support. A failure from this 71 even area here definitely has us leaning on a extended trend lower. Are we looking for a very quick, extended, fast sell-off like how it went from here down to here? Absolutely not. We're looking more of like this, just continuing to grind lower over the next few weeks as we head into the end of the quarter. US dollar Canada, here's an interesting signal here, or breakout if you will. This thing has been rounding at bottom. It made a lower move low back at the beginning of June. Since then it was trying to base, continue to make lower move highs and lower move lows until here we found the $1.20 half basically here some support. Since then, we set a higher move low and we've made a higher move high. That has us on the neutral bias. We are not bullish by any means. However, should we get a breach of $1.2207, and if this U.S. dollar strength is legitimate for a correction with the dollar index, and then also if I am right about the oil trade, no matter what, if as it continues higher to no longer be dominating the currency trend because of potential global slowdowns and what have you, well then we may see an extended correction to the upside. Otherwise, I would be looking for this to be a rally to sell, but right now, because of these other currencies, the way they're behaving, I think that it's not outside of the realm of possibility to get a good correction up towards this little area right here. We'll have to keep monitoring this trade, but right now it looks like over the next week and a half to 2 weeks, as we wind down the second quarter, that there's a good chance that if we get above $1.2207, it will continue higher up into this $23.25 to $24.06 resistance band. Remember, this is an overall bearish market. Do not try and catch a falling knife. We are by no means trying to call a bottom here. G7 meeting, Trudeau is there and so is Biden. They two haven't seemed to be dealing with each other, playing nicely. But now since they're hanging out with the Queen, maybe that'll have something will happen. Who knows? Like I said, it's all pomp and circumstances. But we'll see what comes out of it. So remember, the oil trade, I believe, is off the table for multiple reasons. If that is true, then this bull that has been the Canadian dollar versus the dollar could be going out to pasture for not just a couple of weeks for a correction, maybe for an extended period, meaning that maybe we are seeing the low point for the U.S. dollar Canada for the next maybe 3 to 6 months, maybe even longer. So we'll see what comes out of this G7 and also how these markets react to what's going on. All right, so I know all of you that have held out for the cryptocurrency. Let's look at Bitcoin. This is live. Well, actually a slight delay, but we have Bitcoin making lower move lows and lower move highs. Friday was kind of quiet. As Saturday's here, you can see that we were lower on the day. The key thing is to look at this high at 39,710 and this low at 31,102. Anything above here, I think we'll start to see that there's going to be some strength, and it might help to lift the other cryptocurrencies. Bitcoin is kind of like the dollar index. It does help set the tone for the overall breadth, if you will, of the cryptocurrency market, but it is kind of sluggish. Notice how the ranges have been tightening. There are times when I would say it's winding its coil. I don't think it's necessarily winding its coil. Is the fact that it is just inching along in whatever direction that is. It was wedging. Now it seems like it wants to continue to go sideways to lower. I'd be very cautious being a buyer of Bitcoin right now, because after all, we came off this lower move low, we made a lower move high, we made a higher move low, but then since then we've made a lower move high, and a higher move low, then a lower move high, lower move low, lower move high. So it's choppy all across the board. But on the bigger extents, we can go from lower move low to lower move high to higher move low. Once again, neutral, making this 31,000 a key area. So, but the past week and a half, and on the daily and the hourly, it is in a downward trend, meaning lower move lows and lower move highs. And if support does get taken out, then I think we'll see a big extension. Probably see Bitcoin get back down into the upper 28,000, 2750 area. Remember, where I had trouble breaking out to begin with, that's probably going to become support for right now, as it is right now. We'll fall through it. It'll be resistance for a little bit. We'll chop around, and then we'll get the big rally that comes out of that if the cryptocurrency bulls start raging back. Also, I think that as we start to come to the end of the quarter, remember, people are taking profits. So anyone that has made any money off of, say, Coinbase and what have you, that even though it has been breaking, if they've made a little bit, they may be saying, hey, just in case, I want to take a little bit more off the table. So those are also things that are helping to drive the price of this market. Now let's look at Monero US dollar. This one here, interestingly enough, is a little bit more definable. It came off this lower move high, made this higher move low, lower move high. Now we're looking for a failure here. If this falls below this 220 basically level here, Then we're looking for a continued test of support. This would probably be following Bitcoin should it be testing support, or this may set the lead. One thing that is not notable is that we did have a sell signal here. This is a bearish engulfing line sell signal. We hit our initial target. However, if we start to batter support, that does have us targeting new move lows at 160 on the basis level. Should we get a rally going, especially if we take out this last high from a couple sessions ago, if we get above the high from Thursday at 283, good chance we'll be challenging 316. And if we get above there, looks like Bitcoin and all the cryptocurrencies will be getting a nice little lift and a nice little rally going. Ethereum here, this one's winding its coil in a tight little range, acting a little bit more like Bitcoin than Monero is. That's why it's interesting to see Monero right now. This one here, though, is coming through and made a lower move low today. Now it's positive, so positive on the day, excuse me, but it made a lower move low on the daily basis. As you can see, here was the high, came down, made this low, made a lower move high, made a lower move low, lower move high, lower move low today. The trend is still bearish. We are looking for a test of support only above 2,809, basically $2,900 will we be off this bearish campaign, looking for a fresh leg north. But right now, with the way it's acting, it looks like it's going to keep flirting with support and a test of this 2,183 area. A failure from here would confirm new move lows after a lower move high, extending the trend back down towards maybe the $1,780 to $1,900 area. And also, let's look at the Doji. We all know that everybody wants to talk about the Dogecoin. Now it's right around this. It seems like 30 is like that psychological, 30 cents is that psychological number. I've heard so many people say, oh, when Doge gets to 30, I'm going to buy it and I'm going to sell it at 40 or sell it at 50, whatever, which could be going on, that's for sure. Like I said, I am not trying to state that this is for sure a psychological level, but it seems that basically in this 30 to 50 cent area, you have buyers that come in heavy at 30 cents, and you definitely have a lot of dumping somewhere around this 50 cents to upper 40 area. Where are we going with this one? Well, today we're teetering with new move lows. So the low was set back here on June 8th, and it was at 29.62. Today the low was 30 cents, 30.11. So we're just flirting with this little breakout to the downside. And I think it is kind of significant. We take out this low, especially if we take out either of these 29.64 down to 27.92. This whole area here is key support. Anything underneath here, I think, will continue to see this cryptocurrency erode. Remember, it's had a big run up. As far as how deep would it go, well, I think it could even get back down to 10 cents. So the main thing about this one is that unlike Ethereum and Bitcoin and even Monero, the practical technology aspect of Dogecoin is questionable as far as how many people are going to adopt this technology and continue to use it moving forward. Like if it's just a speculative market, it's a bubble and it doesn't have sustainability. So, and you're probably going to just keep on seeing it bobble between this 30 cents and 60 cents or 50 cents. Should the technology become more mainstream and look like it's going to be adopted by people, especially in the longer term, then I think you have a potential to see this thing maybe even get definitely beyond $1, maybe even get up to $5, $10. Who knows? With the way these, you got to remember the valuations in the crypto space are way overdone. I mean, the regular world is way overdone as far as valuations. So, and no matter what, they're all bubbles. So you're going to see sell-offs eventually, no matter what. So just be mindful and take profits once you get to see some. If you see, especially like 50 to 100% return in a very short amount of time, take your original money off the table and just let it ride. You know, just forget about it. You know, I mean, because it's stupid. You never let it. One of the key things, tenets to trading and investing, is don't let a winner turn into a loser. And I hear a lot of people doing things right now where they're putting themselves in that position where they really easily could do it. I know a lot of people that bought Bitcoin up at 55 to 60,000, 58, 59 seems to be the magic level. I know people that bought it a lot lower too as well who are very happy, but the people who are sitting now with a big slide like it's been over the past month and a half, 2 months, are having a tough pill to swallow. So do we have any questions here? It doesn't think we have any questions on YouTube or on, speaking of YouTube and Twitch, our Twitch channel, Forex Trading a Lot, you can see that we're streaming live. It's showing that right now. You can see our About section that has all kinds of information about just different links that we use, and our access to high probable Japanese candlestick patterns. The book on Amazon.com has a little schedule. You can always pull up the chat, when you're out here. See, there's Chaos and Care. I said hello earlier, and here now we have the mirrored stream. Also, we have our YouTube channel. Don't forget to hit the subscribe button, just like on the Twitch one. You can see what videos we post. This one here, we have a recent, just for beginners, video that we posted here. Sometimes we'll throw up the weekly analysis video. You never know. It depends on the day. So let's do a little quick run around about what we were talking about, just to give you a review and get ready for the week. So remember to watch crude oil and expect it to keep on going higher, up to 75, eventually up to 100. The stuff with Iran may start to slow things for a little bit. We may even see a sell-off back into the upper 60 handle. But as long as we are basing here and we are not getting below the low 60s and back into the $50 handles, we are going to have a problem with the economy. Also, with the U.S. Treasury bonds, remember to watch these if they start to sell off on a daily basis and take out new lows. And this is the key here, is that we have this little baseline right here around 155 and 11 ticks. They have ticks, not pips, like in Forex. This is a big support area. If we take this out, not only are we making multi-month and multi-year lows, interest rates are going higher. That's going to feed inflation, and the cost of everything goes up. That also means the economic numbers are going to fly around. So that's going to have a big impact on Dixie. Remember, we were talking about, if the bonds go lower, interest rates go higher. If interest rates go higher, there's strength in the dollar. That helps to give us a chance to maintain not just a short-term correction that would run out of gas in this initial 90-cent area here, but get us up into this target range here. It's very possible that as funds start to take profits to secure their second quarter, and because they don't have any clue how, no one has a clue how this third and fourth quarter are going to go, all I can say is earnings are waning, profit margins are waning, it's going to start to squeeze. Christmas isn't going to be so nice, and no matter what, orders for 2022 are going to be down because demand is going to be down. If inflation doesn't kill it, just the fact of things coming online at the rate they are is going to slow things down. So be mindful of that. So at the very least, we're looking for this correction up here. Once again, that's going to affect the euro-US dollar in a big way, and it's going to have us targeting this 119.84 down to 119.18 area at the very minimalist, should this occur. Once again, only above $1.2221 are we looking for a rally and a breakout to the upside. So once again, as far as the dollar index, you're going to see strength coming out of the euro trade, where the dollar is getting strong versus the euro. Pound also, this is one to watch. If we definitely hit support again with follow through on Sunday night into Monday, making new lows, that helps to add fuel to the fire with dollar strength and the dollar index, and get us down towards this 139.58 to 138.90 level for the British pound. Very likely to correct here. Now remember how I had that area for the US dollar index? That's the same thing for as the euro and the pound. If you look at where we're looking for a sell-off in the pound dollar, or in the euro versus the dollar, that's the same thing as in the dollar index. We're looking for that kind of rally. So we're looking for a sell-off in these. We're looking for a rally. Something that kind of looks like it would be the US dollar CHF. US dollar Swiss. This is where the dollar index is already rallying, but we would look to see this rally also as well and start to get up towards this 91.98 to 92.63. If the US dollar Swiss shoots up into this area, that puts us right into that spot where the dollar index target index is also. Remember, these are the currencies where we're looking for dollar strength to be, and weakness in these other currencies. And also in the Australian dollar, US dollar as well, we see the same thing with this. This is going to be most likely testing support, giving strength to the dollar, giving a lift to the dollar index, but not any major sell-off here as well. New Zealand dollar also goes the same way with this. We are looking for this to continue to make lower move lows. We're not looking for any extreme sell-off, but definitely dollar strength here, which helps to support dollar index. But remember, as the dollar gains strength versus all these other currencies, the dollar yen, this is where we see a little bit of indifference. And this is where we start to see, when we know that markets are coming back to what they do. It was really easy to use the gold market and the interest rate market, and especially oil, as a premise for where you're going to see weakness with the dollar or versus other currencies and other crosses for the past year, because of the fact that we had so much instability in knowing what the economic numbers were going to be. Now the economic numbers are becoming majorly in focus, and even if they're they're either meeting or beating expectations, it's because expectations are dropped so low, and if they're falling below expectations, that's even more negative. So that's the reality of the way things are going. And as the dollar gains strength versus these other markets, it is really normal to have divergence, meaning that the US dollar yen, that's where you'll see the dollar weakness. So there's got to be some place where the US dollar is not a bull, just because you're strong versus, it's rare when you see any market continue to trend against all the other markets so extremely all the time. There's usually some big force, which we don't have that in the market right now. Maybe we will once we have more economic numbers that come out. But this is the counter trend. We're looking for weakness here with the US dollar yen, unless it gets above this high from a week and a half ago. If it gets above 110.36, all bets are off. Then we really have dollar strength, especially if the euro US dollar continues to go lower, and the pound, if that pound US dollar, if they go lower and we see the US dollar yen climbing above 111 even, I'll tell you what, then we have a raging bull coming up, and then I would not fade any currency versus the dollar until we start to see that stabilize. But I don't think that's going to occur. I think we're going to see a test of support down to 108.88, down to 108.54. That puts us in a very touchy area. Should we get below that, then 107.5 is definitely in our sights as far as the US dollar yen. Another reason I continue to emphasize this scenario is that with the dollar index and these commodities that are off the table now, is this breakout in the US dollar Canada, and especially if we get follow through this week and get above $1.2207. I know it's a stretch to get a correction up to this $1.2325, $1.24 even area, for considering how the market has been trading. We haven't had any really major upside corrections in a long time, and that's all they've been. But it's very likely that as dollar strength comes in versus those other markets and oil is off the table, that we'll see the US dollar Canada get up into this target zone. So with that being said, remember to check out our Twitch channel and follow us. If you're a Twitch person, you can see us. We're streaming live right at now and behind. And then we have our YouTube channel, Forex Trading Unlocked, as well. There's a subscribe button there for you to hit and tell your friends all about. Make sure to tweet us out and give links to your friends. Leave comments also in the comment section. We will answer them and get back to you. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. If you're an Amazon Prime member, you can read it for free. You already pay for it, so why not check it out? With that being said, also make sure you go to forex-trading-unlocked.com for all of your Forex needs and information, and we will see you guys soon. You have a great weekend, and good luck.